Hello there and welcome to News Express, exclusively brought to you by Business AM, Nigeria's fastest growing financial and business newspaper. We'll take a look at leading stories in the paper for the week. And top on the front page, capital market key to easing Nigeria's negative $85.21 billion net foreign liabilities. That's the very first headline on Business AM this morning. Bullet headlines there, but government fails to tap market's potential as markets must grow 10 times in size to meet up. We have this one, capital sink needed in country. Capital sink needed in country. Post negative NIIP at a negative 19.71%, and then financially unsustainable for more credit. Of course, this is going to be our conversation starter this morning. Under that headline, we have silence overshadows inconclusive insurance industry recapitalization. Talking about uncertainty, rocking insurance market, and NICOM caught in political web. What's that about? Risk-based versus recap debate back on. That also is going to be a part of our conversation. The summary section, CBN's long road to 6.29% inflation. Page 5, get more detail. Disinflation squeezes pockets. That one's on page 11 of the paper. And the energy, power and renewable section on page 25, NNPC's Greenfield ambition. And I'll move over to the commodities and agri section where we have the attractions of gum Arabic. All right, I'll bring in Mr. Philip Isapa now to join me for conversations. Good morning, Mr. Philip. It's good to have you on the show.
Good morning, Rachel. I hope you had a great weekend. Good to be back.
I did. I hope you did too.
Yeah, I did. Thank
All right,
you.
Let's get on the headlines now. Starting from the capital market, key to easing Nigeria's negative $85.21 billion. Now, according to the IMF, data that was released by the IMF, Nigeria's foreign liabilities stood at $187.36 billion, while its foreign assets amounted to $102.15 billion, and that's as of December 2020, leaving it with a staggering net figure of negative $85.21 billion. What is the implication of this for Nigeria?
Rachel, this is very, very intriguing. We've been talking about Nigeria going on the borrowing round, across the world, borrowing from China and borrowing from everywhere. But this is a completely different way of looking at what's going on regarding the the balance sheet of the country. Now, you look at all the monies that have come in terms of investment, in terms of assets that are owned by foreigners, in Nigeria, and then you look at what Nigeria owns outside, so you calculate all of this, and then you do is this a surplus, is it a negative, so the IMF did this calculation and came up with this data suggesting that we are actually in deficit of 85.21 billion, in terms of net foreign liabilities. Now, this is really worrying in the sense that there's a whole lot of calculations that have been done, and then one of it is what they call NIIP. I'll get to that shortly, but everything is showing negative, especially because you've had the discussion around whether our foreign debts are sustainable, whether we are okay for continuing to borrow from outside, So this is actually narrowing down to some key data, that is particularly germane to discussing a lot of these issues. So very, very quickly, it talks about this negative situation, requiring the capital market, because you need to have domestic investment. You need to build a broad-based economy that is so huge, that even if people are coming from outside, that at home you are very strong, and then you can when your market is such a huge market, you have liquidity, and then you can begin to invest outside. Your companies can go outside. The Dangotes that are going outside, for instance, the banking industry, a lot of banking companies, Access Bank, GT Bank, and the rest of them who are going outside. That's considered to be assets that is a positive thing with regards to Nigeria. So you put that all together, you find that they are saying that all those investment have been made outside by Nigerian companies, by Nigerian individuals, by government, isn't enough to put us in surplus with regards to what other people have put in here. Perhaps you look at investment in the oil space, you look at investment that international companies have put in here, and you look at all the other investment that countries have also made in Nigeria. So all of that is what they are saying. But so the key thing really is what's the solution, and that's what we need to be hammering on, because they say the key to easing this negative 85.21 billion, perhaps it could grow or it could come down, is to look at the capital market. That there is a lot that needs to be done, in the capital market that can make things a lot easier for the country, And so what is this thing they're talking about? They say the capital market needs to be boosted. Some years ago, as a junior reporter, the talk was about growing the capital market, the Nigerian Stock Exchange at the time, now Nigerian Exchange, to what you call a $1 trillion market. They drew up a 10-year program or so. The Nigerian Stock Exchange at the time.
In fact, development economists were very particular. They said that the capital market needs to be grown 10 times more than what it is currently. And I ask myself, how possible is this? And if it is, how much time do we need? Do we even have that time?
I mean, it's something to work towards. For instance, there's one aspect of it, So at the moment, roughly put, the capital market is worth some $50 billion. I think that's what the estimate that came up with. So if you're talking about 5 times, you're talking about 10 times. You're talking about growing it to $500 billion. Yes. Now, what you need to do is to make sure that the capital market, bring in a lot of companies into the capital market, for that to happen. So one aspect is that there's a lot of debt capital. You've heard of that a lot, I think PwC man, we talked about that a lot last year. There's a lot of debt capital, especially in real estate, that you need to securitize. Nigeria has a lot of debt capital in terms of, for instance, if you look at the oil sector, the NNPC, there's a lot that is going on in the oil industry that is in the hands of government, that is not in real sense securitized in terms of the liquidity situation might take a long time for you to quickly turn it into to liquefy it, so to say. So Nigeria, for instance, you go to the power sector. Nigeria did a power privatization some years ago, and government took hold of the 40% or thereabout in a lot of these companies, both in generation and in distribution companies, and then said that down the road, the idea is that they were going to move this into the capital market, and then sell off what government kept to itself, so that the Nigerian public can participate and own this thing. So if you took all of those if you did evaluation and took a lot of them into the capital market, that is how to grow the capital market, and so many things. But the key thing really is for government to recognize this, and then be expansionary in the mindset, expansionary in the sense that recognize that business should be left in the hands of the private sector, and creating the environment for this to happen, and then encouraging companies to be listed, in the capital market, list those there are so many, you recall, Rachel, that MTN went to the market, was it 2 years or so ago, last year, 2 years ago, and then you saw what happened, and it contributed to raising the stake, So you need to do a lot of that, There's so much, there's a lot of assets, that can be brought to the capital market to begin this expansion. But first of all, the government has to have the mind, to say, we are deliberately pushing this, we are deliberately encouraging this, and this is what we want to see happen, and this is what they are saying, so you have a negative foreign liability, by this report, and because you have that, you need to be conscious that you need to do something about what's going on, with regards to this, as far as this is concerned, So that's what the story is all about, So foreign assets at 187.36 billion, and Nigerian assets at 102.15 billion, as of December, give Nigeria net international investment position, that is NIIP, foreign assets less liabilities, it's at negative 85.21 billion. So this is a very, very detailed what we've come up with. It's a fresh angle to look at this matter. Different from just announcing numbers about something being negative, but looking at a critical aspect of data, that we've come across, and we thought that the public needed to hear about this and then see how you can channel the minds of the government, to growing the capital market as a solution, to this issue.
Okay, Mr. Philip. Now let's quickly wrap this up with a second headline about the recapitalization plan of the insurance industry. They had suspended the first phase before now. It was supposed to be held at 31st December 2020, but it was suspended and was moved to 30th September 2021. The time is already slowly, coming, and investors, stakeholders are currently waiting for what's going on. Any idea what we should expect on the 31st?
Now, this throws everything back to NICOM, the regulator, the National Insurance Commission, which has kept quiet, ever since the suspension or whatever. So people went to court. They went to court, because they felt the atmosphere wasn't favorable for them to meet the recapitalization that the regulator had stipulated, and then as most things normally take the route that most things take in the country, they went to the National Assembly, got the second, the lower chamber, the House of Rep, to get involved into in this matter, and then the reps came up to say, oh, you need to suspend this because of A, B, C, D, So there was a first phase that was supposed to be met December 2020, and then that will have been all over, and then we will have moved on, to the next phase, which is the second phase is supposed to be coming 30th September next month, but while that was suspended, the NICOM, the regulator, hasn't said anything, in this regard, So what is going on? So there's a lot of uncertainty around this issue, and then the sector is completely not certain. But there are analysts who have said, okay, there was a timetable that was set up, by NICOM for you guys to meet, or agreed that some people went to court to try to stop it, and then the House of Rep decided, okay, you put a stop to this for now, but did it stop people from going ahead with it? Who have actually gone ahead to say, to do this? Did everybody, the insurers, did they suspend their own plan, to meet the deadline as already stipulated by the regulator, So could they begin to come out to tell us who and who amongst them have actually met it, or there's still a big crisis? That's what we're not particularly certain about, in terms of what's going on within the insurance companies themselves. And then there's the whole debate around risk-based and recapitalization. What's the best option for the industry? Again, because there was a suspension, first it was go ahead, recapitalize. This is the minimum recapitalization fund that you are supposed to provide. And then risk-based was talked about some time ago. So everything was put on hold, no risk-based. So going ahead with recapitalization. And then the next thing you see, with this suspended and no news coming from NICOM, no direction coming from NICOM. So the debate is back on risk-based and recap debate. There's an interview, a full-blown interview with an academic from the University of Lagos in the paper today, that talked about that it's encouraging 3 years, give the industry 3 years. It supports risk-based as a way to go, but it says give the industry 3 years for this to be put in motion.
Okay, Mr. Philip, but what side are you on? Are you of the recapitalization model or the risk-based structure? What do you think is best for the insurance industry?
Well, so let's look at it. We can go back to the banking. We can take this back to some maybe a decade or 2 decades ago in the banking industry. When they came up with the idea of a minimum capital, there was a huge debate around whether banks that decided to be small, can you leave them to be small instead of just legislating or by fiat saying that all of them should meet 25 billion what's called minimum capital base, and then there are people who want to just be small, but globally for our understanding that globally risk-based is what's used so that you can say this is what I can chew, and based on what I can chew, this is what I can handle, and then a recap just gives one blanket to everybody. Meanwhile, some people just want to remain small and do their small, take their small risk or handle small risk, and just go on, but it's neither here nor there.
Right.
Global best practice will be saying risk-based is a good one to follow.
Okay, we'll wait and see how it turns out on the 12th of September. It's already very close. Thank you so much, Mr. Philip, for joining me this morning on the show.
Thank you, Rachel.
And that was Philip Isakwa, the publisher, Business AM, Nigeria's fastest growing financial and business newspaper. Stay here.